DMM Governance Token Whitepaper Audiobook. DeFi Money Market Ecosystem. Earn interest on digital assets backed by real-world assets represented on-chain. High-level overview. Launching now, users of the DeFi Money Market Ecosystem DMM will be able to receive 6.25% interest on their DAI and USDC by depositing them into the DMM ecosystem and holding the corresponding DAI and USDC assets. The DMM Foundation has planned shortly after launch to release Ethereum, offering similar high-yield savings on the world's second-largest cryptocurrency by market capitalization, Ether. All yield provided to ecosystem participants is backed by real-world assets that generate income greater than the interest owed, and all of these real-world assets are transparently made available on the DMM Explorer. Additionally, the DMM Foundation's collaboration with Chainlink adds an extra layer of security and trust to the ecosystem by writing essential data on-chain that details the ecosystem's health and collateralization. Current market reality. There is roughly $238 billion currently in cryptocurrencies with exponential growth predicted in the coming years. There is $90.4 trillion of physical money and money held in easily accessible accounts in the world, which we believe will be rapidly converted in the next 10 years to some form of digital currency. The vast majority of the world's currencies, in digital or traditional form, are earning little, zero, or even negative interest. For the last decade, negative interest rates and negative yielding debt, bonds that are actually worthless, not more, if held to maturity, has been growing rapidly, destroying potential returns for investors and turning the financial system, as we know it, on its head. There is currently $17 trillion of negative yielding debt globally, which is more than 25% of global investment-grade debt. These two trends, growth of digital currencies and limited ways to earn interest, have massive implications for the crypto ecosystem, global citizens, those living on a pension, investors, governments, and more. In this centralized fiat-based upside-down world, savers are penalized, and borrowers get paid to borrow money. Governments globally have asked us all to suspend logic and ignore one of the most basic concepts of financial literacy, the time value of money. Overview of DeFi Money Market Ecosystem. A permissionless and fully decentralized protocol to earn interest on any Ethereum digital asset backed by real-world assets represented on-chain. The DMM ecosystem, DMME, is building a vibrant global community to provide a decentralized, transparent and permissionless environment to empower all citizens to again earn interest on their currency backed by real-world assets represented on-chain. The DMME is an Ethereum-based and decentralized protocol that allows the creation of DeFi money market accounts, DMMA, a new DeFi native asset class that allows any holder of an Ethereum-based digital asset to earn interest and is backed by real-world assets represented on-chain. The DMME protocol operates in a simple and transparent manner, so anyone can readily understand it as well as verify the veracity of the on-chain assets and collateralization. The DeFi Money Market. DeFi Money Market, DMM, acts as a bridge between Ethereum digital assets and real-world assets while allowing holders to earn interest completely on-chain. The DMME has several essential and complementary components that work together to generate income and provide transparent real-world backing for any digital asset. The DMME is composed of different and separate DeFi Money Market accounts, DMMA. DMMAs are specific to each individual Ethereum digital asset, DAI money market, USDC money market, etc., which empowers consumers to remain in and choose the digital asset class that best suits their needs or requirements. DMMAs are created when a specific Ethereum asset is converted to the DeFi money market token, DMM, through a smart contract that has a specific annual percentage yield, APY. When a DMMA is created for a specific digital asset, using USDC as an example, USDC is swapped for the DeFi money market token, DMM. The corresponding amount of USDC is pledged to be returned for the digital asset provided, in this case USDC, plus a prescribed amount of interest. When withdrawn, the DMM is converted back to USDC plus the interest. As an example, if a person deposited 1 USDC and the APY was 6.25% and held the corresponding DMM for 1 year, they would get back 1.0625 USDC. Interest is accumulated per block and people may enter and exit the DMMA with no time restrictions. DMM is created by applying the DeFi Money Market Wrapper, DMMW, an ERC20 smart contract wrapper that can be placed on any Ethereum token to generate income and provide additional diversification and security through backing by real-world assets represented on-chain. Access to the token is borderless, making it accessible everywhere, and also provides total transparency to the ecosystem's collateralization. The DMMW can be placed around any Ethereum digital asset, providing an easy and instant way of adding the ability to generate consistent interest payments, all secured by real-world assets represented on-chain. The DeFi Money Market Wrapper allows the creation of the DMM token, allowing anyone to automatically start earning income on their digital assets backed by real-world, income-generating assets. To be considered a DeFi Money Market account, DMMA, outside of the requirements of it being decentralized, transparent, and permissionless, DMMAs must have the following additional and essential attributes. 1. It earns consistent interest. 2. It is backed by real-world assets that generate income, which allows the interest to be paid. 3. The backing of the assets is made transparently available on-chain. 4. DMME is always over-collateralized in 2 significant ways. A. The real-world assets backing DMM are always greater than DMM issued. B. Income generated by the assets is greater than the APY, meaning, income generated is greater than payments due. We believe the over-collateralization, diversification, and consistency in interest rates makes the DMMA a compelling addition to the Ethereum ecosystem. All of these points are important distinctions, as unlike traditional money market accounts, DeFi money market accounts are not backed by the Federal Deposit Insurance, FDIC, or other centralized government entities. The DeFi money markets are based on the total transparency and view into the verifiable assets, not faith in the sovereign centralized government systems. Furthermore, there are no minimums, so anyone can start earning interest on as little as $1. Current options for earning interest. DMM looks to provide stable returns 5x to 6x a traditional money market account, launched now M. USDC and by APY 6.25%. While there are a growing number of interesting ways to earn interest on crypto, most of these options lack the essential elements of the DMMA, specifically the real-world backing and 100% transparent view into the underlying assets. We believe many people would like to diversify some of their holdings into new ways to earn interest on crypto holdings and will find the over-collateralized income streams, stable rates of the DMMA, and on-chain view into the underlying backing as attractive. The goal of the DMME is to provide the ability for anyone globally to once again be able to earn interest on their money. Current traditional money market accounts provide for very low interest rates globally. The DMME looks to provide consistent and stable returns at a rate many times superior to traditional alternatives. Our 2 initial products M. USDC and M. DAI both carry an APY of 6.25%. We believe and hope the DMME will be the beginning of a multi-trillion-dollar opportunity and shift to the return of earned interest to the global monetary landscape. In the coming weeks, the DMM Foundation will be looking to add 𝙏𝙼, which will allow users to receive the same high-yield interest rate that is offered in the other 2 assets. DMM backed by real-world assets. While there have been many wonderful developments in the Ethereum ecosystem on new ways to earn interest on your crypto holdings, we believe a crucial gap that needs to be filled is blending real-world assets with digital assets. By bridging these 2 ecosystems, we are able to bring the strength of both ecosystems to the table. This allows us to create a more robust product while providing total transparency in a relatively trustless and borderless manner to the underlying assets. DMM and Chainlink collaboration. The DMM team is collaborating with Chainlink to provide reliable and tamper-proof inputs and outputs for the DMM smart contract. Chainlink's decentralized Oracle network provides the same security guarantees as the smart contract themselves, eliminates any single point of failure, and maintains the overall value of the DMM smart contracts to assure it is highly secure, reliable, and trustworthy. Chainlink's role in this system is to reliably and securely take information on the assets that back the DMM ecosystem, and publicize them on-chain. This includes the flow of funds that underpin the system, as well as the valuations of these loans. Between the two prior bits of information, Chainlink will be able to accurately and transparently portray the health and collateralization of the DMM ecosystem, as well as inject the necessary information for ecosystem participants to know how their crypto is being allocated to generate interest. There are 3 different states the cryptocurrency could be in the DeFi money market ecosystem. For the sake of continuing with our example, we will use USDC. 1. A portion of the USDC deposited is held to provide ongoing liquidity to the DMM, allowing users to withdraw their initially deposited funds, plus interest, whenever they would like. Initially, we will keep this reserve ratio, the amount of crypto purposely kept in the smart contracts, higher to ensure there is sufficient liquidity. As we gather more data on the usage of the protocol, we will adjust this ratio accordingly, in order to put more of the allocated capital to work. 2. The deposited cryptocurrency is transferred out of the smart contract and into fiat, to be allocated to more real-world assets that produce income streams. This intermediary process may take multiple business days since it operates at the mercy of the legacy financial system. We will explore ways we can work with Chainlink to make this step in the process more transparent. 3. The fiat that was transferred out in state 2 is allocated to real-world assets that produce income. As soon as the fiat is allocated, Chainlink will receive the new data and publicize it on-chain. The real-world assets backing DMM include vehicles, property, and other hard real-world assets, which are income-generating. The assets pledged serve as collateral for DMM and are secured through a first lien, senior secured position, meaning it is above all other rights and have first priority in the event of lack of payment. If income payments produced by the loans are not met, the secured asset can be sold to recover the capital and add collateral back to the system. The income produced by the loans is used to cover the interest payments due when DMM is converted back to the original digital asset, plus interest. All the loans produce greater income streams than interest due to holders of DMM, which acts as an over-collateralization of DMM and will generate revenue for the eventual DAO that will run the protocol. The initial backing of DMM will be a pool of vehicles, cars, trucks, etc., located in the United States of America, which we believe is the first time that vehicles have been tokenized to provide interest in this manner. The reason we chose this as the first asset class is because the core team has deep domain experience spanning several decades in this space, generating income production of between 15% to 20% return over the last 5 years. Additionally, this asset class has several other substantial benefits as a backing for DMM when compared to other real-world assets. Some of these benefits include 76.3% of U.S. workers use a personal vehicle to commute to work. Historical trends show consumers pay for vehicles before their real estate or rent. Vehicles are one of the most liquid asset classes in the world. There are 2x weekly auctions in every major city where they can be sold for cash on the spot. Unlike real estate, there is no long foreclosure process, in the event of lack of payment. Rather, the asset can be recovered without additional legal action. The asset can be transported for nominal fees to maximize resale value. Risk is diversified amongst many individual investments and geographies. Shorter term, average 1 year, provides for greater liquidity. The average car age is 5-9 years old, meaning the majority of the depreciation has already occurred. Vehicles depreciate 10% to 30% in the first few years of ownership, and then depreciation slows substantially. Additionally, the loans are shorter term, so it is unlikely the vehicle will depreciate markedly during the loan's 1-year term. All borrowers must complete and provide income verification and prove the ability to repay. In most states, in the event a party is not current on their vehicle payments, a registration hold can be placed on the vehicle. As a result, their license plate cannot be renewed until the owed sums are paid. This prohibits them from legally driving the vehicle until the owed sums are paid in full. Valuation of the underlying assets in this class in the DMM are provided by a third-party oracle. In this case Black Book, www.blackbook.com. Since 1955, Black Book has been the primary valuation tool for dealers, auto finance companies and others to provide precise automotive data and analytics. This function is performed for each individual asset, as opposed to bundled together. This information provides a clear view into the underlying backing of the DMM token. These factors combine to make a stable asset pool for DMM and backs it with consistent, predictable income streams to pay the interest on DMM. We believe it is a strong first use case. Architecture. The architecture for the DMM ecosystem can be broken down into 3 components: a suite of Ethereum smart contracts, a treasury management function, and Chainlink-compatible data feed for providing off-chain data to the suite of smart contracts or public consumers of the data. The suite of smart contracts revolves around the creation of the DMM token as well as its governance. The owners of the DMM ecosystem contract currently have the ability to issue new token wrappers that support the DMM criteria, like M, DAI and M, USDC. Additionally, there are basic configuration variables that are governed by the contract's owners, like setting the minimum collateralization level of the system, the current interest rate and its corresponding growth/decay function, the amount of locked-up cryptocurrencies that can be withdrawn at once and over specified time intervals to be allocated to the corresponding real-world assets, the minimum reserve ratio of what percentage of the underlying cryptocurrencies must remain in the contract for ongoing redemption of the locked principal plus interest, the time delay that occurs when any of the above configuration variables are changed, pausing the system, in case of emergency. The prior configuration variables as well as the protocol's governance is handled by an upgradable controller contract. This controller contract subscribes to the proxy pattern, which allows new functionality and bugs to be patched by the governors of the protocol. In addition to the above configuration variables, the other responsibility that will fall onto the governors of the protocol, as well as the eventual DAO, is the allocation of excess funds that are earned by the real-world assets. As the income streams are over-collateralized, we believe the excess funds in the system could be substantial and will be shared with the DAO. More information on this is described below. Before the transition to a DAO, the ownership will be managed by a Gnosis-safe multi-signature wallet that hits a proxy contract with time delays of 1 hour. As the protocol matures, it is our intention to increase these delays significantly. The way the interest rate is determined is relatively abstract. It could be a dynamic function that's based on demand, or it could be a static number that is set by the governors. Since the core contract will point to the interest rate contract that conforms to a specific interface, it is trivial to point to any number of new interest rate contracts that fundamentally change how interest is accumulated. The interest is also accumulated by applying it to an ever-growing exchange rate between the DMM and its underlying token. The idea is similar to compound finance's exchange rate between C tokens and the underlying asset. 1. Whenever a mint or redeem occurs, the interest rate is updated at the start of the transaction, to reflect any changes that occurred since it was last indexed. Each DMM is represented as an ERC20 token. The symbol for each token will be the underlying token symbol, prefixed with the letter M, for example, M, USDC. Each user's balance, and thus the interest earned, is represented as the user's balance of the corresponding ERC20 token. Additionally, users are able to mint and redeem tokens for themselves to start earning interest. Aside from the typical functions that exist in an ERC20 token, The following user-facing functions also exist in the contracts ABI. The data feed that serves the off-chain data from Chainlink to the suite of smart contracts is composed of a couple of smaller components. Firstly, updates to existing loans, removal of old loans, and insertions of new loans are reflected by a simple RESTful API that is served to Chainlink nodes from the organization. Since these loans utilize a digital process for taking a first lien position against the automobile, the validity of these liens can be seen through the digital liens proof file for each asset. This is the sanitized image of the government file showing lien status. All personal information is sanitized to assure consumers' privacy rights are protected. The way these liens are independently validated changes on a state-by-state basis in the U.S. Also, the valuation of the underlying vehicles that back the loans is pulled from Black Book to provide a consistent way to determine the collateralization of the loans and therefore the entire DMM ecosystem. In the future, reserved 𝙠𝙠 in the smart contracts can be locked in the DSR. The idea behind 𝙏𝙝𝙖𝙣𝙠 is the owners of the protocol that may lend access tokens that are locked in the protocol and withdraw them dynamically at redemption time. The priority of the governors of the protocol will be to never put the funds at additional risk. The DSR is one such example that is safe, because it's not being lent against, as opposed to other on-chain protocols that provide yield. 2 stablecoin money market accounts. Our first 2 use cases for DMM are stablecoins. We chose 𝙠𝙠 and USDC because there is considerable volume, liquidity, and access. We also believe the ability to earn interest in the diversification provided by DMM with its real-world asset backing makes for an attractive addition for holders of these stable coins. USDC Money Market, M. USDC, due to its volume, market penetration and use by many institutional power users, we believe using USDC with the DMME is attractive as a strategy to diversify risk as well as earn a stable interest rate. 𝙠𝙠 Money Market, M. 𝙠𝙠. The Maker/𝙠𝙠 community is familiar with the concept of collateralization, complex financial instruments, and has a deep love for transparency and DeFi. We see this as a first step to the many ways we can work with the 𝙠𝙠 community, further adding value to the DeFi ecosystem. While the initial interest rate for the 2 initial DMMA is set at 6.25% APY, the DMME governance will vote on an ongoing basis as to the rates. While our first 2 use cases are both stable coins, the next DeFi money market account will be for Ethereum, ETH, allowing the roughly $20+ billion of ETH to earn consistent interest backed by real-world assets represented on-chain. When METH is released, it will provide the same yield, have the same level of diversification, and, of course, its yield will be backed by real-world, income-producing assets. If you would like to be alerted when METH is available, please visit our website and enter your email to be informed. Risks and their mitigation. There are many potential risks that the system faces. It is absolutely essential that ecosystem participants take these risks seriously and take all necessary steps to mitigate them. This section outlines some of the risks identified as well as the ways the ecosystem participants plan on mitigating them. Hacks and malicious exploits. Perhaps the largest and most obvious risk is an exploit in the deployed smart contracts in which the hacker may break or steal the funds that underpin the system. In such a situation, assets held in reserves for paying out interest could be stolen without any chance of recovery. Because of the severity of this issue, smart contract security best practices are of the highest priority for DMM development. The codebase for the smart contracts has been reviewed by independent 11 teams that have deep domain expertise in developing secure smart contracts. They also are undergoing an audit by one of the top smart contract auditing firms in the industry. There is always the possibility of unforeseen errors and irrational actors that could seek to attack the system. Properly aligning economic incentives should help mitigate irrational actors from attacking the system. The ecosystem's administrators also have the ability to pause the system, which will prevent new DMM from being minted and redeemed. The main configuration also prevents new DMM from being added to the total supply without sufficient collateral being placed on chain via Chainlink. Initially centralized architecture. The failure of the ecosystem's semi-centralized infrastructure in the early days of the ecosystem is another important and addressable problem. Early in the ecosystem's maturity, the ecosystem's organizers are responsible for budgeting for expenses, hiring personnel to continue development and marketing, seeking partnerships and investment opportunities, and managing legal risk and interfacing with regulators. Although the DeFi Money Market Foundation has excellent domain expertise in key areas, failure in any of these key areas could set the protocol back or, at worst, be fatal to the ecosystem. We plan to mitigate this by transitioning the ecosystem's control and direction to governance token holders, which will be designed to align incentives and create a sustainable way for key participants to contribute to the growth and continued success of the DMM ecosystem. Additionally, the community and infrastructure that will be built by fellow companies/projects in the Ethereum community will further add to the resilience of the project. The system's underlying assets, while there is risk surrounding the assets that back the system, the general nature of DMM and the over-collateralization of both the assets backing DMM and the income streams provided are in place to protect the overall DMME. There have been sufficient steps taken to mitigate risk by keeping the loan-to-value (LTV) ratio well below industry averages. This means that any repossessed assets when sold should recover the principal, plus interest. Additionally, the vehicle-based loan business has typically seen minimal instances of repossession with significant recovery of the loan's principal. To further diversify risk, these loans are distributed across geographic regions in the U.S. and frequently have thousands of borrowers coming in and out of loans. This diversifies risk away from only having a few underlying loans back the system and guarantees fresh liquidity coming in and out of the ecosystem. Treasury management. We believe the treasury management portion of how crypto that is converted into fiat is not transparent enough. We will be looking to work more closely with Chainlink and other industry participants to see how we can make this intermediary step in the process more transparent, so ecosystem participants can see where every dollar is, all of the time. It is also worth noting that our initial tranche of assets being tokenized is $10 million and are already producing income. Meaning, the first users to enter the ecosystem and put crypto into a DMMA will be extremely over-collateralized. DMME governance, transition to DMM DAO. One of the core beliefs of the DeFi money market ecosystem is every stakeholder in the ecosystem should participate in the decision-making continuously, without having to rely on or trust anyone. The DMME's members will be initially sourced from the core team and community members and is composed of owners of the governance utility token, which holds voting rights, based on ownership, within the ecosystem's continuous approval voting system for new features as well as its direction resulting in a democratic and decentralized structure. Governance tokens are fixed in quantity and it is anticipated that within 12 months of launch, ownership will be completely distributed and decentralized. The distribution of governance will occur over two distinct transitions. The beginning of the process to decentralization starts with a transitional DAO acting as custodian, essentially the role DMME's core team fulfilled in the ecosystem at implementation. This initial transition will remove central points of control and help ensure that the protocol is unable to be captured or censored, while also exploring the movement of treasury control from the core team members to a DAO. The transitional DAO will consist of a limited number of members with equal voting rights. Membership will evolve to include key token holders or their representatives, along with fewer members of the core team. A critical aspect of this migration is that a single legal entity will no longer be responsible for the protocol or its control. Multiple independent entities will act as service providers to the DAO, with no service provider having unilateral control over the protocol or its governance. Functionally, this will look like multiple independent teams financed by revenue from the DAO to maintain critical functions for the ecosystem's protocol. The DMM DAO will be established after the transitional DAO, and the timing of this will be managed using the existing and evolving voting protocols. The structure of this DAO is to be determined, but the core team's initial view is to develop a representative democracy. This will allow token holders to elect using their token holdings for a specific DAO representative. All votes by all representatives will be available for review, and if token holders are displeased with the positions taken by representatives, they can withdraw their support and the representation will be removed. The DAO's participants will also share the ecosystem's success and revenue. Generally, the DAO will be over-collateralized with income-producing assets and, as the ecosystem grows, this over-collateralization combined with its related income stream will allow for to be determined reserves to be established and maintained. With reserves in place and growing income streams, governance token holders will receive DMM DAO rewards, which will lead to a robust, vibrant ecosystem and infrastructure. DMM Governance Token, DMG. The DeFi Money Market Governance Token, DMG, is the tool through which the community governs and grows the DMM. DMG grants its owner the right to vote and direct the system that bridges the gap between real-world assets and the new on-chain economy. As we look to build a vibrant global community, DMG is a critical component that will engender broad participation and eliminate centralized control risk. Specifically, DMG effectuates governance of the DMM via the DMM DAO, which will be given control over the Ethereum smart contracts and adjacent assets. Further, as the DMM is over-collateralized, with real assets yielding more than payments due to asset holders, the DMM DAO is the recipient of a positive income stream that can be used to fund further loans, capitalize related assets, or otherwise grow the ecosystem. DMG thus represents the right to govern the project, and a claim on the excess revenue. DMG will be made available through a series of Dutch auctions that will run on the Dutch trading protocol, an on-chain auction mechanism that is tamper-proof, front-running resistant, and fully transparent. The Dutch is owned and governed by the DAO, a group of approximately 400 stakeholders that controls the protocol and many other DeFi and Ethereum-related assets and services. Auctions are slated to begin in the second half of March 2020 and will run continuously for 1 month in discrete tranches that last an average of 6 hours each. Any Ethereum address is able to participate in the DMG auctions by bidding ETH. The Dutch ensures that all participants in a given auction receive DMG at the same clearing price, mechanics especially well suited for price discovery on new issuance. If you have an interest in being advised when the first Dutch auction will begin, you may sign up here to be alerted 24 hours prior to its start. Roadmap. The technical roadmap for the DMM is impressive in nature and can be categorized as 5 major developments. 1. Adding support for more categories of real-world assets, which can further back the system and provide yield to token holders. 2. Adding more tools that further improve transparency, adding trust as more people join and stay in the ecosystem. 3. Integrations and APIs that will allow for existing tools to hook into the DMM, which will grant the project more users and exposure. 4. Improving the treasury management function to become more efficient and transparent as the ecosystem matures. 5. Implementation of the DMM DAO, which can govern the protocol, fund development, add assets and receive rewards. Examples. Diversification out of home country currency and risk. Globally, it is very typical for those with higher incomes to diversify risk through the purchase of assets, mostly property, outside of their home country. This has been driving real estate prices higher in many markets in Europe and North America, since many people have been buying these properties to transfer currency and risk out of their home country and generate some income. With that being said, this has been almost exclusively the domain of the upper tiers of the economy, because the middle and emerging classes do not have the capital, contacts, and infrastructure to do this, even though they would likely appreciate the same form of diversification. DMM can act as an equalizer in this manner, since it provides all these benefits but can be done for as little as $1. As DMM is asset-backed, now any citizen can have these same benefits of diversification and income regardless of income level, providing greater financial inclusion and opportunity for all citizens, regardless of country or socioeconomic position. DeFi Money Market Fiat Gateway, DMMFG, To enable the above example, we will be creating software for fiat on-ramps into the DMM. This will enable anyone to globally participate in the community and have a part in aggregating fiat streams for those who want to diversify into an asset that is free from government intervention, debasement, censorship or control, as well as produces income. We believe this will be of particular interest in areas of the world with high inflation, governments debasing their currency, or for those who would like to diversify in country asset and currency risk. We believe this will help in unlocking the trillions of dollars in negative to zero interest financial products globally, and a good reason for the adoption of Ethereum-based assets. Conclusion and open invitation. The DMM was designed to solve the crucial $17 trillion problem of once again allowing for global citizens to earn interest on their money. While initially focused on holders of digital assets, we believe the ability to earn interest with a fully transparent view into the backing and over-collateralized income streams will provide another reason for those in the fiat world to join the Ethereum community. While our two initial use cases launched today are both stable coins, we look to collaborate with others in the Ethereum community to create additional DMMs for the many different digital assets that currently exist, and believe DMM will provide for the ability of any Ethereum digital asset to earn interest, providing greater diversification and stability in interest rates. The founders of the DeFi money market ecosystem have set forth an aggressive but prudent plan to grow the DMM, embracing the ideals of decentralization and focused on the widespread adoption of DMM through close working relationships with all in the Ethereum community. We welcome the ability to work with and collaborate with all as we look to build a global vibrant DMM community.